Welcome to the Startup to Exit podcast, where we will bring you world-class entrepreneurs and VCs to share their hard-earned success stories and secrets. This podcast has been brought to you by TIE Seattle. TIE is a global nonprofit that focuses on fostering entrepreneurship. TIE Seattle offers a range of programs, including the Go Vertical Startup Creation Weekend, TIE Entrepreneur Institute, and the TIE Seattle Angel Network. We encourage you to become a TIE member so you can gain access to these great programs. To become a member, please visit www.seattle.tie.org.
Hello, everybody. My name is Gauri Shankar, and our podcast Startup to Exit is on with a bang in 2024. My co-host, Shirish Natkarni, who has been doing all the podcasts with me, will also be asking the questions again. And we are hoping that you enjoy all the podcasts that we've been doing with our guest. Thank you for subscribing, and please do tell more people so they can all enjoy from our guest wisdom. A little different start to our podcast series in 2024. We're going to start with a few folks we know and respect well, venture capitalists, who will give their 2024 outlook. Before I hand it off to Shirish, I also want to plug Shirish's latest book. He's a serial author now from a serial entrepreneur, and his book, Winner Takes All, is available wherever books are sold. So with that, Shirish, over to you.
Thank you, Gauri. Hello, everyone. My name is Shirish Natkarni. I'm a serial entrepreneur and board member of TIE Seattle. As Gauri mentioned, we have a number of guests with us today, all esteemed VCs. Our first guest is Sudip Chakrabarti. Sudip is a very, very experienced entrepreneur and investor. He's currently the managing director at Decibel VC, a VC firm based out of the Bay Area. And prior to Decibel VC, he was an investor at Madonna Ventures here in Seattle, and Research Horowitz and Lightspeed VC. So welcome, Sudip.
Thank you so much, Shirish and Gauri. It's always so much fun to talk to you guys. I really appreciate you guys inviting me here.
Great.
Excellent.
So, Sudip, tell us a little bit about your firm and your investment thesis.
Yeah, absolutely. So our firm is called Decibel, Decibel Partners. We started about 4 years ago. The thesis behind starting Decibel was very personal. So we all here at Decibel have been founders before, and in general, technical founders before. We started companies, we raised venture money, we had wonderful investors on our boards, but their help was not as impactful because they were more of a generalist, and they lacked deep knowledge in our sectors. So when we started Decibel, we really started with specialization because we wanted to be helpful to the founders who are going to back. So at Decibel, we only invest in one area, that is enterprise IT infrastructure software. That's all we do. And then we have been able to build a number of different founder services to help our founders go from 0 to 1. So think of us, bringing your customers, helping you design your go-to-market machine, help you recruit your first 25, 30 people, and also help you tell a great story. So all of those founder services are led by different operating partners here at Decibel, and we bring that to the table when we invest in a company. And finally, we are focused on seed and Series A, so nothing is too early for us. And then we are usually investing in companies founded by great technical founders who sometimes might have an open source project, sometimes just have an idea on a napkin. And then we invest anywhere from $2 to $10 million. Our current fund raised earlier this year is a $285 million fund. So we can go long with our founders as they build these companies. I hope that gives you a sense of where we focus and what we do.
That's great. Thank you, Sudip. So let's talk about 2023. What was 2023 from an investment perspective compared to 2022? The reason I asked is because interest rates went up quite a bit, and Nasdaq took a big hit. So did that impact your pace of investments in 2023?
Yes and no. So first of all, I think 2023 was really a tale of two cities in some ways. Uh, what I mean by that is for the mid to later stage companies, I think 23 was a really rough year, particularly if you haven't quite figured out the fundamentals of your business. To raise a round while you are sitting on a valuation that was kind of inflated from late 2020 to 21, it was hard because you are sitting on an inflated valuation, your business is still early, and money definitely dried up. So a lot of our friends in growth stage venture funds hardly did more than one or two investments this year. On the early side, it was a very different picture because I think a lot of that was because of all the excitement we are seeing around AI powered companies. So it it has been a crazy pace in 23 on the early side because a lot of great founders who were sitting on the sidelines thinking about maybe they will start a company someday. Suddenly they saw this amazing tectonic shift coming in, and they didn't need any more conviction, so they jumped into the game and ended up starting companies. And we saw that happen again and again, these amazing teams coming out of all these amazing companies, big or small, and really starting their companies and getting a lot of investor interest. So we saw like crazy activity on the early side, as a result some crazy valuations, and a lot of the later stage venture funds also came up to do more early stage investments because they were not they were not being as active on the growth side. Hence the early sector, early stage market has been really crazy, frothy, mostly in a good way.
Mhm.
So that's really what 23 has been for us. I would say one other thing, and this is more personal and related to Decibel. Like if you had asked us back in 2022, I think there was a little bit of a concern around the table about some of the infrastructure software market segments being kind of mature or done. So we were seeing a lot of companies in certain segments that were almost like splitting value in terms of splitting hair in terms of what value proposition they brought to the table. Whereas I think in 2023, certainly because of the new AI stack, the new technology, a lot of those segments that were mature are again up for grabs because now you can go and displace a lot of the incumbents because you now have a very fundamentally different tech stack that can do things very differently, can offer a very different cost model, and probably a different distribution as well. But certainly, a lot of these segments that we thought were kind of mature, were done, had incumbents, are up for grabs. I think that has created a lot of opportunities around the table, particularly on the early side.
That's great. So, how are valuations impacted? I'm sure it's again a different story for the early stage versus the growth stage companies.
Yeah, that's exactly the case in terms of valuation. So, on the early stage side, valuations were pretty rich in general, particularly if you're coming out of a company that has been building in the AI space, has been building in the LLM space, and you have a strong technical background in that, I think you pretty much commanded really premium valuations, no question about it. Okay, like there were companies that we got excited about, eventually got done by someone else because the valuation was way too high for our own taste. And when I say way too high, I mean like a cold start seed company, you know, raising at 65, 70 pre. So, which is hard to do, honestly. I would say the other thing that also contributed to high valuations is the size of the rounds. So this is actually really interesting, and I think for the first time we are probably seeing this. Like we didn't see this with the shift that happened with internet. We didn't see this with the shift that happened with mobile. But now in AI, I think there is a fundamental interesting trend we are seeing, which is like the world is getting divided into two buckets. One that we internally call GPU rich or GPU hungry. These are companies that need to raise a lot of money to even get the compute they need before they even roll out their first product. And then there is a second bucket of companies that are GPU poor. They probably don't need to raise nearly as much. I think the GPU-rich companies, what we have seen in 2023, have raised humongous amount of money. $35 million seed, $55 million seed. So that is it's also very unique in 23, and I don't think we saw that before with internet and mobile.
Great. Over to you, Gauri.
Great. So, Sudip, you talked about the tectonic shift, right? That is reorganizing the tech stack, and nobody is beyond, um, you know, change at this point. So, hey, first, have you done AI-centric investments in 2023? I mean, where you said we have to do it because it's AI-led?
Yes, absolutely. And I'll give you a little more color
Mhm.
because maybe one of the things that will be interesting to your listeners is what are some of the broad thematic areas someone like
Mhm.
us have been focusing on. So for us, and this was true for 23, and this will be true going forward, I would say broadly there were three thematic areas for us. So first one, which is natural for us, is the infrastructure stack. So the whole infrastructure stack obviously is getting almost reinvented in some ways because of AI workloads. I think even some of the cloud computing stack we know today is probably going to get reinvented. So we definitely have paid a lot of attention to that. I mean, obviously, we all know about vector databases and all the infrastructure you need for RAGs and all of that. I think it fundamentally requires different kind of stack, and we have paid attention to that. We haven't made a ton of investments in that area just yet. We have had made at least one that I can think squarely fits in that bucket. And I'll tell you why, because it still feels a little early in terms of what that stack might look like when it is settled. So I would say we are paying a lot of attention to some things that are breaking out and ended up making one investment. But you could expect us to do more in future as the tech stack settles or standardizes around certain components. So that's one big thematic area for us, infrastructure stack. The second one for us, I kind of touched on earlier, which was okay, like you have this different existing infrastructure software market segments. How can those be disrupted with AI powered solutions? And I think that is going to be a big focus for us in terms of investments. Like we have made investments. There's actually a company in Seattle called Dropzone that we led an investment in, and they are doing security. Think of them as SOC analyst in a box, and that whole space was kind of done, but now suddenly is up for grabs because with AI and LLM, you can offer a very different capability, very different cost model. So you'll see us doing that in different infrastructure software segments again and again. So that's number two for us. And the third one, I think we are very early in the cycle, but we actually have already made a couple of very interesting investments there. And this is something I think we are personally very excited about. So we have this internal joke that we are going from a SaaS world to a SaaS world. Let me explain. So when I say we are going from a SaaS world, I mean software as a service. And then we are going to a SaaS world, I mean service as software. And this is something we actually have even blogged about a couple of weeks ago. And we believe that a lot of the roles or jobs are going to be significantly automated with human supervision, but still significantly automated. The mundane parts of the job of a human are going to be automated. And we'll see a lot of these, companies that might look like a services company from the outside, but is powered by software largely inside. And I think we'll see that quite a bit. So we have made one investment that is, think of it as a more like a financial research analyst in a box, again with human supervision. We have made another investment that is like, think of it as an IT services company in a box, but again powered by AI. So I think you'll see a lot of those investments from us going forward.
Got it. So building on the three theses you have, so you have the two worlds, GPU rich and GPU poor, and within that, in infrastructure, seems like the low hanging or the first attack for you is going to be where humans in the loop will work with AI and reorganize the infrastructure in ways that we might not yet understand. Is there a confluence between the GPU rich and your fundamental thesis on, hey, let's reorganize the stack versus you don't hear that many GPU poor yet. There's a ton of conversation around it, but still it's very GPU rich, especially the infrastructure, allowing a few, maybe seven big players to be a winner in 2024, at least seems like it. What's your thesis on that?
Yeah, so I will be a little, I'd say, almost provocative here, and I'll say that in general, by and large, we are going to stay away from the GPU rich or the GPU hungry investments. Uh, and what they generally look like is they are kind of building or training their own foundational models for maybe image generation, maybe whatever the use case might be. And to even build your first product, you really need to invest in your GPU compute. So probably half of the round that you raise is literally going to NVIDIA, the next day, if you can get it, that is. So I think in general, at Decibel, we are going to stay away for most part from those kind of investments. Um, our focus is really going to be the GPU core. And that's sort of like, all the investments we have made in 23 kind of fit in that bucket. I think, even on the infrastructure stack, there is a GPU poor play. I mean, think of it as the picks and shovels play, right? Where you are not on the hook to build the best foundation model, but you probably are the infrastructure that enables others to run open source models, fine-tuned, proprietary models. So we are big believers in that kind of movement. We keep calling this our small model movement. So there's large models, obviously the LLMs, and then there's the small models. We believe that yes, open source models are not there yet in terms of quality, accuracy, and so on, but they will get there. I mean, that's probably a safe bet to make. And we also feel like a lot of the enterprises will want to train or fine tune their own models based on open source, Llama 2, or whatever, the next one that comes through, and then really have control on how they run those. So the infrastructure stack that enables that is a big opportunity for us, and it fits the GPU poor thesis.
Mm-hmm. So let's do a quick rapid fire round here. 2024 is the election year. Economy is frothy to maybe having a good landing. How is that affecting your investment thesis?
So we actually are kind of bullish about 2024 because towards the end of this year, I think we are seeing some budgets open up again. So, and we are seeing that through our portfolio companies. I feel like in 2024, it's going to be less about our investment thesis, more about companies that have something to sell. I think they will have a better year. That's that's my view. In terms of investment thesis, I think what's going to happen. You already see this. I think particularly on the AI side, I think we are going to get some realistic lessons. So this year was extremely frothy. Everyone was shipping a demo product, but that last mile has been super hard. Like actually putting AI powered products in production at a large enough scale is super hard. And I think a lot of people are kind of realizing that, particularly on the enterprise side. So I would say in 24, you will see this theme of going from prototype to production. So a lot of focus will be on how do you take that looks very cool in a demo to actually production. And I think a lot of our investment thesis is going to be in investing in companies that enable that last mile. So that's sort of like the impact on our investment thesis, because we do feel like the budgets will open up for any of these products.
So my final question to you, one prediction for 2024, and I'm going to come back in 2025 to make sure your prediction comes true. So what's your prediction for 2024?
That's a really good one. Let Let me think for a second. I mean, I'm guessing you guys will cut out some of this,
Yeah.
right?
No, we'll keep it all together. Don't worry.
All right. Okay. Let me think. I mean, you kind of put me on a spot here a little bit. Okay. Let's say this, right? Which is there will really be a real competitor, and this comes from my own bias towards open models, open source. Like I spend a lot of my time there. I think there will be a real competitor in terms of an open source model that can give the OpenAIs and the Anthropics really run for their money. I don't think that is true today. In 12 months, I think that will come true. At least I really hope it does, because otherwise, we will have this, huge vendor lock-in without an open source alternative. So that's my one prediction. We'll have a really serious contender from the open source ecosystem to OpenAI and Anthropics and Coheres of the world.
Sudip, thank you very much. On behalf of TI Seattle and Shirish Nadkarni, we really are happy that you predicted an open source AI LLM model, and we'll hold you to that. Thank you very much, Sudip. Appreciate you spending the time with us.
Thank you so much, guys. It was really fun. Really appreciate it.
Thank you, Sudip, and all the best for 2024.
Thank you for listening to our podcast from Startup to Exit, brought to you by TI Seattle. Assisting in production today are Isha Jain and Mini Verma. Please subscribe to our podcast and rate our podcast wherever you listen to them. Hope you enjoyed it.